Retail is too broke to buy crypto in this bull run. You've probably heard that phrase off multiple comments, multiple tweets, but is it really true? Because it does make you think. Bitcoin is soaring at all-time highs, but yet, your favorite altcoin is not moving yet. And so let's break it down in this video. By the way, my name is Ken the Crypto. I've been trading and investing in crypto for over 8 years. Subscribe to this channel if you want to see more educational crypto content, up-to-date news, free courses, and some meme coin alphas. Now, in 2020, 2021, retail investors flooded crypto markets thanks to the stimulus checks. As you see here from the past news from CoinDesk, nearly $40 billion in US stimulus checks may be spent on Bitcoin and stocks. And the phrase that you're hearing that retail is too broke, people are basically comparing the current bull run we have right now to the bull run back in 2021 where everybody had stimulus checks from COVID. And I get how that sounds. There's a lot of variables as to why altcoins are not pumping right now or that we may be having a weird bull market. And so if we could break down the facts to get a better answer, in 2020, US households received over $800 billion in stimulus checks. And according to a research by Mizuho Securities, $380 billion of that was used to purchase two types of assets, stocks and crypto. And while that was happening, towards the end of Q4 of 2020, Coinbase rose to about 43 million users compared to their 32 million users in the previous year. But in the beginning of 2021, it rose to 54 million users. That's an 11 plus million added users in just one quarter. Now, if we fast forward to the current times, we could see headlines that Americans are revenge saving after years of splurging. We can see here that the personal savings rate or the percentage of people's disposable income that they save increased to 4.9% in April from 4.1% in January. So people are saving more. And it says here that Americans are now revenge saving after years of high inflation and as they face the prospect of continued economic volatility. And of course, it only makes sense that people were saving more because they literally thought World War III was going to happen. But it shows here that people have money to save. And so it doesn't necessarily mean that retailers are broke. It just means that their spending or investing behavior just changed. And if we look here for the Center for Microeconomic Data, we can see here that credit card balances fell by $29 billion from the previous quarter to stand at $1.18 trillion. Auto loan balances also declined by $13 billion to $1.64 trillion. Now, what we can see here is people are actually paying off their debt. So again, it doesn't necessarily mean that people are broke, that retailers are broke. What this means is that people are a lot more smart about what they're spending their money on, because if balances fall, it just means consumers are spending less overall. They're consuming less. Maybe perhaps the prices of everything is going up except altcoins. Now again, the fact that people are saving more, people are paying off their debts, it necessarily doesn't mean that retailers are broke. It means they still have cash, they're saving smart, and they're not splurging on a lot of items. Now, according to the Crypto Trends report by Gemini, they are stating that the latest bull run makes it clear that many retail traders have returned because bull markets are characterized by a gradual transfer of wealth from long-term investors to newer and more speculative investors. A significant portion of the speculative investors are likely to be retail investors who are intrigued by the surging prices and quick returns. Perhaps that's what we saw towards the end of 2024, where a lot of altcoins surged. However, right now, altcoins are not moving just yet. Now, when Bitcoin reached its recent $100,000 all-time high, new investors held at $99.6 billion of hot realized cap for the network. That's equivalent to over 13.7% of the total network wealth, which last cycle peaked at a value of $45.3 billion with a network share of 22.5%. So this suggests that there's a strong market demand and return for retail investors, while also there's a lot of room for growth. Now, this report also states that retail activity in the Asian region, APAC, has grown at a faster clip than any other geographies featured in the report. So in the last cycle in 2021, the US might have been leading the bull market because of the stimulus checks. However, it's showing right now that Asia is leading that bull market. And perhaps US retail investors haven't bought in just yet. And according to Gate Wallet right here, over 61 million new wallet addresses were created in 2024. That's a 33x increase from 2023. So again, there's still a lot of demand in crypto. People are setting up wallets. A lot of retailers actually still haven't exited the market yet just by looking at this Gemini research. Now, again, all this research states that retailers not broke. They're simply dollar cost averaging. They're saving more, spending less. They're investing in small, frequent amounts. And it really looks like they're just saving their money for better opportunities in the market. So it doesn't mean they left crypto. They just may be watching in the sidelines and seeing how the market will react. Because yes, let's be real here. There's a lot of political events that's been happening in the past 6 to 8 months with the tariffs, with the Trump administration. But putting all that aside, historically, retail jumps in after price rallies. And it's usually driven by FOMO, FOMO, not a line on credit. It's the same patterns we saw in 2017, 2021, and it may be the same pattern that we're seeing now. Again, retailers are waiting on the sidelines right now to see what's going to happen with altcoins and Bitcoin, most likely within the next couple months. And so linking today's CPI report for June, as we see, it rose 0.3% month over month, 2.7% year over year. This basically means inflation is rising, which in simple terms, every day's cost is getting larger and larger. So how does this benefit crypto overall? Well, retail is staying very cautious, because of course they were probably wrecked last year. This has also been a weird bull run because of all the events that have happened, but we are still in a bull run. And so a lot of retailer is really just holding off to see what the next move of the market is going to be or any big news that's going to come out. But an increase in inflation supports a case that people will need to take their fiat, put it in digital assets or any sort of asset to simply protect the value of their fiat, which is called hedging. So based on everything I presented, based on the research and the statistics from 2020, 2021, all the way through now, retail isn't broke. They're just strategic, they're more smart, and they're more influenced by the macro trends like inflation. People are continuing to save, pay off their debts, and invest. They're just doing it a lot differently than how it was in 2021. The current CPI numbers, or inflation, that basically just reinforces their initiative to stay in crypto, not exit it. And so if you are a retailer like me, perhaps now may be the time to start investing in crypto. Because as I said in most of my videos, we have about a few months left until I believe that Bitcoin will top. And I'll explain more in this channel. Hit the subscribe button if you enjoyed this video. I post weekly educational content on how to trade crypto, specifically meme coins. I'll give you some top picks and some more updated market news like this. Thanks for watching. I'll see you later.